Hello, Warriors. Ingmar, Brand, how are you? Everyone doing okay? Hi, Kman. Nice trading yesterday. AJ, Mike
Hey,
Delfino, Paul, all you guys. Okay, so okay.
hey Dale.
Can
Hey everybody.
can how you doing? So can the dollar bears claim victory here after what
Uh,
happened
we'll
yesterday?
uh, we'll know in half an hour probably if we get bad retail sales and PPI not overshooting. Can dollar bears claim victory? It's a bit of a question. Yeah, the yen has caught up on a few crosses as well, but there's still decent work to be done. You have your blue line there. I've got a bit of support as well. Trend line support coming in around 149.7580. That should really break for it to have a look, a decent look lower. Um, but yeah, the dollar got absolutely smashed yesterday, didn't it?
Yeah. So with it pulling back today, is this a break to buy in cable?
I think yeah, it's I would be feeling perhaps more comfortable on a 123 handle if we get a bit of better numbers this afternoon. But looking at the mood in the market and the moves that we saw, I do think that even if we get a better retail sales today, there will be people waiting to sell dollar rallies.
Okay.
So get a decent setback in any of the pairs, really. I guess my best guess is that there will be enough people waiting to continue what they started yesterday. And let's not forget, if the retail sales would come out good, it's like we have been saying on some prior phase, it's not necessarily bad for risk, right? So they could actually see a bit of a reaction on the rates and then turn the ship around again on equity markets, despite the slightly higher rates.
And can I
Yeah.
add to that? And good morning, guys.
Morning,
Morning.
And Dale, by the way, Ryan is out. He's got COVID, so he passed the test. I mean, it's hard to pass that test, but when you pass it, he's winning. So we're joking about that internally. Anyway,
Oh,
unfortunately, he is
I
not
stayed
feeling
up.
well.
I stayed up all night studying for my urine test.
Yeah. Hey, hopefully you pass that urine test as well today.
Yeah. Anyway.
No, but what K-Man's saying is very true, because you talk about the quote unquote soft landing, right? If retail sales aren't bad, but the other thing that we have to also think about is like how everybody, the overarching theme is yields have peaked. And this is why K-Man's saying, and I agree with this, that dollar rallies are going to be sold, because the overarching theme in the market is that yields have peaked and they are going to be coming down. And the big story out overnight is, and we were chatting about it in the chat room over the last 24 hours or so, is how rate discussions have gone from a further rate hike to now cuts are being priced. And how much was it, K-Man?
Well,
Two and three.
we went from I think we went up to nearly 1% cuts into January 25 now, and especially the expectations for the cuts have been brought
Forward, right?
forward
Yeah.
to June now, and there's already some in the Fed funds showing some moves showing for starting in March. Perhaps the UBS will be right after all. Um,
Yeah.
but
It's
again,
it's
that's
yeah.
the pendulum is swinging, right? The We also have to know that yields elsewhere. I mean, if you look at the Eurozone and the UK, for instance, the other majors, they have been following suit. They are also lower, not to the same extent, of course, but they are also lower. So I still, even if I'm like a bit shorter now, dollars also with my dollar input, but I'm still somewhere cautious.
I think TLT has fulfilled its first wave. That's five right there. So that could get a pullback. And then also want to caution people that are thinking about rate cuts over a year from now that we're trading today. And we're going to be trading a week or two ahead. And even when you look at the 10-year, you see how we diverge and you have a little 3 drive here. It's still possible we get a rally here. Not to new highs, but a rally here. So just saying that maybe the interest rate scenario short term could change for, a few days or a week, something like that.
Dale, if you zoom out that chart, or you just put it on the daily chart, what you're going to notice is we're in a big channel, and this is channel support that we're pivoting off of right now
On the yield chart?
on this 10-year yield. Yeah, just put it on a daily chart. You'll easily see that. It is put it on daily and then just zoom out a little. You'll notice that this is a big channel, and this is channel support right here. I mean, it is, okay. So that's why if the data comes in weaker than expected today, like with producer prices and with retail sales, let's just say they are weaker, we could see a pretty severe breakdown in the 10-year yield, and this is where TLT will really start ripping. So,
okay, all right. So, you're going to buy them?
No, but I think that I'll just have to, really, turn on the sell dollar spigot a little bit. So,
okay.
But look, Dale, you've been calling it, man. You were saying, hey, I expect the dollar index to get down to 104, and we're here. How? I mean, did you really expect it all to happen in one fell swoop?
No, I did. No, not at all.
Who did, right?
I mean, I tried Euro at 108. So, it wasn't great timing. You also have the daily moving average here at 103.50 actually is my line in the sand to say that's it for the dollar. I think we're a little under 38%. Halfway back is 103.45, and to me, this is a bull bear line here. So you have the 200-day here, and on the weekly, it's even, really.
Well, you remember,
like
and it's interesting. I remember when you had Rohit here.
Yeah.
He was looking at the exact same channel that we were. And that was, on the breakout above. I think it was back in September when he was here, if I'm remembering correctly. And we were looking at that breakout of the dollar index. So we broke that channel in the dollar index on the, I think you have it on there on that weekly chart. Anyway, we're just back testing that broken trend line right now, but I didn't expect this move to get down here so fast. I mean, that's the thing that
everything's happening fast.
Well, yeah, and that's, Kman said it. Mark Chandler wrote it this morning. The pendulum is swinging really fast, and it's amazing how the market sometimes it always shocks me. But in all these years of watching the market, and you guys probably feel this way too, it always shocks me how over exaggerated sometimes these moves are. When and everybody was talking about it yesterday. I mean, CPI missed. If you look on,
barely.
Barely. I mean, marginally. I mean, so what is your explanation of that, Kman? Because mine is positioning is just really poor. It is really poor. You got everybody that was very short the market. They were trying to reverse, after the last 2 weeks, but, probably hanging on for dear life, hoping inflation still, their last hope of as a bear or as somebody who has not been fully invested in the market was, well, let's just hope inflation data continues to be, relatively strong. And then, obviously the weakness just propelled, short covering and more position squaring and more people, getting long for the inevitable seasonal rally. I mean, that's my explanation. What do you think, Kman?
Do you expect me to say yes or no, or
no? Like, do you have anything else that you would attribute to that?
Yeah, there's several things, right? And as I said in the room as well yesterday, it's like over the past weeks, there's been like these big box filled up with little packages, and they're all fitting nicely into the box. A bit of slowdown, a bit of lower inflation, a bit of already the equity markets recovering, and then a few reports out saying that the hedge fund community is completely underinvested. Not saying they are short equities per se, but they are they're very underinvested apparently.
Yeah.
They're at the lowest investment in months. It's well 6 or 9 months or so.
Yeah,
And all of that it was adding to the puzzle yesterday. Yes, I mean the higher for longer narrative has been bought. Market probably long dollars versus one and the other. If you look at stuff like Kiwi, for instance, where the data are actually a little weaker of late, it's really a revenge move higher, very, very, very fast. And I think it's all like fitting stuff in boxes. But again, yes, as I'm saying, I mean, the pendulum is maybe already swinging too much. I mean, we will see on today's numbers. I trust if we get a weaker but mild weak retail sales, and if we get a PPI a bit in line with what the CPI showed, those same people will feel stronger again, and we're probably going to see another move. Higher in risk, which correlates to a weaker dollar, and et cetera, et cetera. I think it's just like a lot of small things fitting into a larger box and setting the wheels in motion, really.
Yeah. Dale, looks like you wanted to show silver.
Yeah, this was the best looking silver chart that wasn't making new lows with the rest of the miners, and looks like we have a breakout.
Yeah, that's an inverted head and shoulder pattern. Looks pretty good.
Yeah, I mean, compared to some of the others, this one not as great. This one was interesting. It's a falling wedge. It's in, and a lot of people trade First Majestic. So that's happening in the junior ETF. Look at how this bottomed. All right, almost reminds me of the S&Ps. There was no reason to buy it the day before yesterday, right? And then all of a sudden, boom, everything looks okay. So silver, once it negated that breakdown at 40, off to the races. So all I ever did was buy a bunch of physical at $21 and a little bit of shares, but boy, silver looks fantastic.
Gavin in the chat room is just reporting, target earnings and TJ Maxx. One of the things that I'm just sitting here looking at what he's reporting because I'm trying to focus on the show. But
I buy all my clothes at Target and
Target. It's funny as a parent.
Sounds exotic.
Yeah, that's Target. So when your kids are like, a toddler age, it's like the only place you can get your kids to go to. I'd like, okay, kids, you get popcorn and I'm going to push you around in a cart, and I would just throw shit in the cart. And then next thing you know, a couple years later, I'm like, I only own Target clothes. It's because that's the only place I would go to with kids that I could actually get through, without, never have time to shop for myself. I don't do that anymore.
Come in. How were those earnings?
Just looking at the earnings, the fourth quarter adjusted earnings per share is a little bit below expectations. No, but their earnings are better, but they see fourth quarter adjusted earnings, which is going to be lower. But the flip side is TJ Maxx raises guidance, which to me that's a little bit of a warning, as people are discount shopping, but that's neither here nor there.
Okay, why don't you grab the charts? And I know there's probably some things that you have on your charts that I don't, for sure.
Well, this is I want to show you really quick. If you guys didn't see the ABCD Euro move, we completed it yesterday. Now we're working off, that overbought condition, and you can see relative strength is really overbought. I'll take you to a live chart here because that was on ForexAnalytix, all the updated stuff. Look at 4-hour RSI. I mean, those are levels that we have not seen in a year that we hit yesterday. You can see them here, right? So we are still overbought, by the way. That doesn't mean that we will fail here, but I would be very skeptical about chasing much higher in the euro. It still could obviously go higher, but the bulk of the move was yesterday. So, you know, to get a follow-up move with the same outsized, you know, percentage movements is going to be very difficult to do today. Now, one of the things that I was mentioning to Kman earlier, if you guys didn't see that the UK UK PMIs, what did the CPI out of the
CPI
UK,
and PPI, yeah.
PPI and CPI. CPI came in a little worse than expected, but the PPI is a little higher than expected. Now that didn't really influence the cable much, did it?
No. But they were still lower than last time at the PPIs. They were a little higher than expected, but still lower than what was last time.
Yeah.
But you know, we came back from the highs in the cable a little bit on the back of it, but it's more like an algo move. If you look at it now, relatively euro is doing better than the sterling again. Euro sterling a little higher. But I think a lot is going on as well in those crosses. And I'm talking about sterling commodities, euro commodities. Commodity currencies are really back with a vengeance. And that is, I guess, something that we will have to monitor again today. So yeah, on the sterling, I think we are mooching around a little bit. Of course, those numbers are a bit CPI coming a bit lower, but if you look at the core, it's still at 5.7%, right? That's not going to change the Bank of England's mindset in any way right now. So yeah, that's about it.
Yeah, and that's
really
and I
decent
think
levels
that's the
in the
point.
cable coming up, by the way, just above 125. Really decent levels coming up.
Yeah, well, so we're at the 38% retracement long term, like just sitting here at the 38% retracement. We're just above the 200 DMA, and you know, we wrote last night that dips to the 200 DMA are going to be supported. So if you look at you know, the sterling analysis, we're expect buyers back at the, you know, 124.50 level. That was written last night. You know, today's low is 124.53. So buyers are coming in, you know, ahead of that 200 DMA. Now, what's going to be really interesting to me is if we break back below that. That would be obviously a strong dollar move, which could be on US retail sales, maybe producer prices. Mike was just saying that, you know, producer prices aren't going to move the market, but don't forget, we've had producer prices move the market over the last couple of months. You get CPI moving the market one way, and then PPI could, you know, can also move the market because it, you know, just has, especially when you see an outsized move like we saw yesterday. I mean, that is a big move just across the board, no matter what you're looking at. But Dale, I wanted to show you this just because again, this is the level that if you look at that previous channel, I was talking when Rohit came on, we were like right here, and we were all talking about like the same, you know, resistance, the same you know, dollar index. Well, we broke it, right?
Good memory, because I don't remember that. How long ago was that?
That was in September. So which, you know, Dale, you usually you usually remember everything. So that's that's a little scary to me.
Yeah,
you're like falling apart at the seams here.
Ninth inning, buddy.
Come on, you're still in the seventh, and we have to stretch. So so anyway, we're back testing that channel right now. 161% extension also of the, you know, the last bounce in the dollar index. So you can see why there's a lot of support. We also have the 200 DMA not far below. So even if the dollar index takes another leg lower, just remember the 200 DMA has offered support in the past as we've been there. So this is where I start going, yeah, if the euro rally is much above 109, I don't know how much more it's going to have in it today, you know, regardless of the data, because so much damage was done yesterday. One of the other things that I noticed, and Kman, I don't know if you saw this as well, the dollar Mexican peso is kind of holding up. I would have expected the dollar Mex to be trading back down to 17.
With risk on, yeah.
I mean, go ahead.
That is what's happening in the Canadian dollar as well, if you look at it. And why? Because of the US proximity, I guess. So if you get the US under pressure, the US dollar under pressure, those two may lag a little bit, you know. But on the other hand, dollar MEX has been has been doing quite a nice move, yeah, back down from those 18s. But if you look at it, and it's especially the Canadian dollar who is lagging. And I guess it's because oil is not following this move lower in the dollar, because there's more about supply and demand over there. And that's what's weighing on the Canadian dollar, especially through the process.
And a lot of people are, I mean, I know I don't live in Canada, obviously, but I hear back from a lot of Canadian people that are very, very negative on the Canadian economy as a whole. So
including Adam Button.
Yeah. Oh yeah, Adam, just what it was last week. He was really, you know, quite bearish on the Canadian economy. But which, you know, I mean, you see that this, as Kman is pointing out, it's really been reluctant to move much. And notice how the 50 DMA here just, you know, we may probe below it, but it doesn't really sustain. And you'll notice that there is channel support just below that. So I would be very careful about trying to chase the Canadian lower here at, you know, at this stage. But one of the other pairs, just in case we have some another series of weak data came in, is the whoops, I didn't mean to do that. The dollar yen. We are approaching this channel support here, which, you know, is pretty, I think it's pretty important. That's that rate check that we had back on, what is it, October 23rd, just before you know, Halloween holiday here. That support's coming in pretty hot and fast.
Still a higher low, you know. I mean, you can't completely say it's done, probably till it breaks down. I mean, still a higher low.
Yeah. Okay, man. What do you think about this?
That's exactly what I showed in the room this morning, yesterday, on the flow show, everywhere. And then that red line, 148.30.80. If you take the whole zone, there's a bit of a whole zone there that you can take. That to me is do or die for dollar yen. And the one last thing that I want to remember, and I think I said it on Face yesterday as well, is that remember November 2022 when the US inflation started to really turn around. That's when we had the big dump in dollar yen from 146 down to 127. So yeah, I don't know if history will repeat itself, but who knows, right?
You know, I look at this 152 level and it marks up a couple of pretty big reasons why we need to focus on it. It's, you know, longer term, it's obviously resistance. You have people going, oh, double top, but we can also say intraday, you know, we also have another double top here if we start breaking below here. So, you know, if you take out this level or, you know, thereabouts, technically speaking, you have a double top in play. So that means it actually, you know, the projection would be a move down to 146.60. Again, this is all predicated on, you know, let's say we have some weak data today and the dollar yen starts breaking down. Those are things that we should be paying attention.
They didn't even have to intervene this time for it to break from that level.
Yeah.
So that's another thing, right, Kman? I'm sure you got something to say about this because you take like the euro yen, it's ripping balls.
Enough reason to me to still intervene, because if you look at the trade weighted index yen, it's putting in new lows every day. Yeah, we corrected what 50 points in the euro yen from the highs yesterday. Or in the speed of the move, but I mean, look at those yen crosses; they are absolutely at really lofty levels. I mean, your Kiwi yen is actually trying to break out. Aussie yen
multi-decade breakout here. I mean, that's
Aussie yen as well. No, it's those levels are wow. I mean, I really. For the yen to strengthen, I mean, this should be your first signal, right? Or even not your first, but an extra signal, because even the yields in Europe and the UK are also coming down because it's starting to show rate cuts for next year. So I'm starting to really be skeptical about the levels on those yen crosses now.
You know, and you know, we got about 6 minutes before the data comes out. I should probably look to see if Greg is here because Greg has been popping up. He is not here. Okay,
No.
so just I want to just take it over to 6J. You're making some good points in the chat room yesterday, Kman, about where we were at versus last year. And I don't know if you want to repeat what you were saying, but yeah, here's the yen. I mean, I mean that's crazy, right? Yeah. So yeah, big moves here, and it's really, you know, really looking like, gosh, you know, what does the Ministry of Finance and the BOJ do around these levels? It's going to be rather interesting. But
and your 6J is that's dollar yen, inverted dollar yen, right?
Or just the yen contract.
Well,
That's
is it all pairs included? No, I don't think so. Huh?
Oh, it's just yen futures.
It's just
yeah, I think
yen,
it is
just
included
an inverted dollar yen.
Against the dollar. It's inverse of the way we trade.
It's the inverse of the dollar. Yeah, if you look at the trade weighted index in yen, it's absolutely crazy. We are much lower than when they intervened last year. Much lower. If you compare other currencies as well.
So real quick, we got about 4 minutes actually until data comes out. Hey man, what's on your radar today as we go into this, you know, double-decker data?
Yeah. Okay. Just first of all, continuation on the equity front. The S&P, I think 4,500 is a decent enough level to watch on the close today. If it doesn't stop there, and then I think we're going to print another 100 points probably. But I'm especially looking at the antipodians. Aussie still a bit long, Aussie CAD as well. Aussie is one that really looks like it wants to go. So if it gets a confirmation today above that 65 and a quarter, could be another couple of percent in there, you know. And as I said, for the rest, I think the mood in the market is right now that even if you get slightly higher numbers, the market is going to look for levels to counter trade it in the dollar. Let's say get the euro 50, 60 points lower perhaps, and that may be the dip to buy into right now. And then your close is 108.80 is going to be pretty important on the euro. I've got a trend line there from March this year. March over May, August, September, and that comes in right around 108. Yeah, that one, you have it there. You extend your blue line. It's 108.80.
Yeah, it would be it's if you look at the dollar index, it's basically this channel. Exactly. So yeah, I think you're right. If the euro makes it a little bit higher around the 109, you know, 109 and change, you're going to find sellers up there.
That was Ryan's target. Congrats, Ryan. So you have at least you know, a little comfort while you have COVID on making a great trade.
Yeah. Did you say comfort COVID comfort?
Yeah, a little comfort that, you know, it's better to have COVID with a victory than a defeat.
All right. Well, for me, I'm really going to be watching this dollar yen. I think it's going to be very important as this channel support comes in, which is 109.8 or I'm sorry, 149.80. I think we got to watch it because if that starts to break, then you got to start looking at other yen pairs and seeing how they're acting. So I think that's going to be a really key support. And I agree. I think the dollar index is near a lot of support here, and how we react just a little bit lower on some follow through from yesterday is going to be key. Now we are 1 minute away, so let's go ahead and put it on the 15-minute chart on the dollar index. Let's go ahead and flip it over to the S&P. Let's let me see if I can. I got to move this out of the way. Okay, let's bring that down a little bit. Here's 10-year yields. You can see 10-year yields. There's the dollar yen, which actually we should probably just put it on the euro. Oh shit, I didn't want to do that. Let me go backwards. Hold on. And let me go over here and put it on the euro, since that's going to be probably better to look at. And let me grab the data flash. Oh, there it is. Let me move that out of the way, bring it back over, and here we go. We are 20 seconds away. All right, so we have the 10-year yield over here, the S&P right in the middle. Let me just move that down just a little bit. And then we have the euro right off to the that's big. Right off to the left here. So
Very nice job of managing the screen.
I'm trying. Oh,
here we go.
Lower PPI.
Retail control group still waiting, but PPI final demand negative 0.5 as on this with a
retail sales must be weaker than expected.
No, actually not much weaker, but not much difference either.
7% estimate. Empire Manufacturing 9.1.
Yeah, you can see the data here. Retail sales, they came in a little bit better than expected.
All right, but they are around the flat level, right?
Yeah, so yields dipped, initially, but you can see yields are actually posting a little bit of a reversal. The euro spiked up towards highs. The dollar yen pushed new lows below, towards 150, but we found some buyers pretty quickly. So yeah, I don't know. I don't know how much.
Are back where they started.
Yeah, I don't know if we're going to get much of a move here. I mean, the euro.
What's the
tried
yen
to push
doing
highs. There? Yeah, look at the S&P. We pushed new highs, and then we're reversing all those gains right now.
So and
look at the yields; they're starting to reverse here.
Yeah.
That's what Pinkert said.
Oh, is that what? I'm sorry, Dale. You are a little light. Your volume right now. I don't.
Yeah. Okay.
Yeah, maybe that's it. But anyway, sorry, I didn't mean to repeat what you said. I just didn't quite hear it. So yeah, look at the euro pushed up, and then here we are coming right back down. Let's see how we react on a dip below 108.50. If we make it below 108.50, I think that's going to be a little bit of a mover. See, the sterling's at lows, European lows right now.
Is my volume better?
Yeah, much better. Actually, you sound better.
Okay.
Right now.
All right.
Dollar CAD hit a fresh low, hit the 88% retracement. It's bouncing now. Dollar yen couldn't sustain new lows. So yeah, watch yields, guys. Looks like yields look like they might show a little bit of a reversal.
Are the metals coming off at all, Blake?
Let's take a
couple
look.
Of bucks on gold, but not really much.
Yeah.
Right now.
That 1970 remains really critical resistance. We're, just really
silver looks great, and gold, I don't know. So
yeah, silver looks better. Huh?
Yeah, silver does. God, but remember, silver at 2380. This is such critical resistance up here, right there, and we're backing away from that too. So, well, maybe the dollar might get a little bit of a reprieve here. So, we'll see.
Nice coverage, guys.
Yeah, great. And by the way, we're not even close to being done yet today, because Dale, you have a great interview coming up. But more importantly, guys, be on the lookout for headlines. You got Biden and Z meeting today. Are they meeting in San Francisco? Somebody said it was off, and I'm like,
yeah.
They're supposed to be in San Francisco, right?
They're going to take a tour of the empty panda cage at the San Francisco Zoo.
Come on, Dale. All right. And then also be on the lookout.
We want our pandas back, Blake.
Be on the lookout for headlines about government shutdown potential.
Oh, no, that's done.
No, that's.
Oh, did they pass it? They passed it. That's right. That's
today
right.
They're going to
the funding bill.
No shutdown.
Sorry,
so we could continue our,
It's still pretty early in the morning here. I'm still getting my bearings straight. So
come on, you get an extra hour now. No excuses.
I know. I really don't have an excuse, do I, Dale?
I do. I do for 6 months now. Anyway, great job, Kay. Good explanation.
Yeah, thanks, Kman, for filling in for Ryan. By the way, thank you.
If you guys talk to Ryan, tell him Godspeed. Get well soon. We miss him. And all right, and thanks, Blake. And we do have a great guest. Arnaud Tertier is with us. Arnaud, it's been such a long time. It's great to have you back in F.A.C.E. How have you been, bro?
I've been great. How are you doing, Dale?
Pretty good. What a couple of wild weeks we've had here. I'm going to test my memory out. When was the last time we were together? Do you remember? 6 months ago or so?
Yeah, I was supposed to be on in July, but unfortunately I was really sick.
Yeah. So it's probably about 6-7 months.
Yeah, I think so. Yes.
All right. Well, You were constructive the market then. I think we're trading, I don't know, 3,900, 4,000, and I remember
Right.
you looking for 43.40 or so on the
Correct.
upside,
Cor-
but God, you know, so
correct.
much time and so much so that my memory still is pretty good. I remember what my guests say so I could fry them if they're wrong.
That's
Anyway, I don't fry anybody, just myself. So,
yeah.
um, you want to share your screen, Arno, and tell us what you're seeing now?
Yes.
You know, okay,
Here we go,
I,
right? We're good.
we got it. We got it.
Wonderful, wonderful. That's a very good memory, Dale. Better than mine. I didn't even think that far back. I must
Yeah.
admit. So that's a really great
Uh,
start. Yeah, half a year ago, that's what we were looking for, and I think we've achieved it and actually exceeded it as well.
yeah.
But you know, you can't predict the future, right? We can only make a prognostication slash forecast about it.
Oh my God. How many times has your preferred count changed in 7 months?
More than I dare to admit.
See what I mean? Yeah. All right,
Yes.
go.
and
All right.
that's fine. I always say,
Yeah,
60% of the time it works all the time, right? That's how it goes.
I like
And
that.
that's just the unfortunate nature of the markets because we're dealing with a probabilistic environment. And as you know, I'm an Elliott Wave practitioner, I guess the right word is. So we're forecasting the market based on fractal repeated patterns that are in a limited set. And I've pulled up here my website where people can read more about the Elliott Wave theory. And so you understand a little bit what tools we use primarily to forecast the markets. And the
What
good thing
separates
is,
your, I'm sure you follow, I've asked other Elliotticians. I'm sure that you take a look at other people, Elliotticians' work and maybe not,
yes,
but what separates there's so many people practicing it, and it seems like everyone has different counts and different twists. What makes your practice of Elliott Wave different than the pack?
I think I use what I would call a more scientific approach, a weight of the evidence. So besides Elliott Wave, I also will look at market breadth. I will also look at seasonality. I will look at sentiment
Okay.
and combine those. So if you are in a third wave, you would like to see bullish sentiment. You would like to see market breadth increasing, like the
That's
McMillan
not happening.
oscillator.
You know, the bears that are getting run over right now are saying there is no breadth thrust on this rally.
Oh, yes, there was. There definitely was a breadth thrust. Let me go quickly over there. So that's
Okay.
something you want to look at. But then, of course, no thrust is created equally. So here is the swipe breadth thrust we had. Let me zoom in real quick. I think about 2 weeks ago now, earlier.
That's when it started.
Yes. So it is a simple measure. So we had that early November,
Yeah.
and it means that market breadth expanded real quick. We went from a important low to a expansion in rallying stocks. And of course, it's a market of stocks. It's not a stock market. So if a lot of stocks start to rally, it will lift the market higher. Here I have the stock market since 1924 and all the swipe breadth thrust events since 1940, which I believe were 23 in total. Sometimes you have double events, meaning
What
you
was
have
happening in 1953?
in 1953, on the political or geopolitical scene, I don't know.
Oh, I just
I,
wondered if I was born during a breadth thrust in
oh,
1953.
that's
I'm kidding.
okay. Anyway,
Uh,
it's pretty close. No, 53 was nothing. Sorry, I was looking here. It's about 1950.
You weren't even a thought by your
No,
parents yet, were you?
no, I was born here in 1974.
Oh, you
Um,
punk.
I'm a real jet.
All right.
Yes. Anyway,
Anyway,
so what I do is then, of course, it's an important message from the market, but you want to look at all the previous events. What did the market do? Well, in general, of course, the market rallies. So we can always say, well, the market rallied. Yes, long-term, the market rallies. That's the whole point of a stock market, that it goes higher over the long term. Otherwise, there's no use of having a stock market. That's quite simple. But then, of course, you want to see different occasions where it happens. And there have been plenty of occasions, I'm not going to go into detail, where you get a thrust event. And then actually, after about 2 weeks, the market starts to decline. It might even go below the price from where the thrust event happened before the real bull run starts. Now, that has happened several times here in the 70s. I believe here in 2015 also. And I believe here in the 40s as well. Here in the 60s again. So there have been several occasions where the breadth thrust event was like a meh. You know, like, yeah, no, we didn't rally straight out of the box forever and never look back. So that you want to then use for your Elliott wave. Is your Elliott wave then looking for a wave 1 higher, wave 2 lower setup, like something like this, 1, 2. Then maybe the breadth thrust happened here, right? You go a little bit lower first, then higher, lower again, and then, so this is the second wave, and then you blast off. So that is kind of where I use market breadth. I'm also looking at, for example, seasonality. This is seasonality, the seasonal trend of the S&P 500 over the last 95 years. Now, I always tell folks, price is the final arbiter. It's only price that matters. That's the only thing we trade. We don't trade seasonality. We don't trade market breadth. All of them are important, but they are second tier, third tier, or fourth tier. Sentiment is important, but as you know, sentiment will stay bearish or bullish for a long time before it finally matters. But price always matters. And that's the beauty of Elliott Wave, because you know above or below a certain price level where your primary view is wrong and you need to reassess, and then your alternative becomes the primary. Unfortunately, when stock markets go sideways, like here in October, for example, as shown here, then you have several Elliott Wave options available, and it doesn't make life any easier for those that want to follow it. So if there are 3, 4 different options available because price just goes sideways and you're simply waiting for a breakout or a breakdown, it doesn't happen, you can then look at market breadth. Is market breadth improving during the time it goes sideways? Yes. All right, then maybe our bullish alternative is, you know, gaining traction. But is seasonality pointing lower? And it did here in this case. It was looking for a low around October 26, 27, which is exactly what we got. All right, so since then, we've had a strong market rally. But then seasonality says it's just an average. That's why I would say don't hang your hat on seasonality. It's an average of 95 years. So there are years when this rally doesn't happen, and there are years when this rally is much stronger. Supposedly, seasonality were top on November 11. Well, that didn't happen. That was already last Friday. So we're pretty much now past that window where you say, you know, you want to see a top. And then we should have bottomed here November 20th. It can still happen. We have 5-6 days left. But it starts to look increasingly unlikely. So here you all of a sudden see like, well, we followed seasonality great, and now it's falling apart again. And that happens. That's why I say 60% of the time, it works all the time. Right? That's the thing. And eventually, maybe we're going to catch back on with seasonality. It starts working for a while, then it falls apart. And that's the same with the Elliott Wave. The Elliott Wave is an interpretive method, right? So you interpret the market, and your interpretation of the market can go wrong because it's not easy to understand what millions of market participants are thinking about the market going forward. So back to your original, 6 months ago question. I went actually back a little bit further. This is an article I wrote on investing.com. People can follow me on investing.com, where I update every now and then. And as you can see, let's see here. Mouse goes back up there. This is from October 17 last year, where I was already looking for, it's maybe a little hard to see here, enlarge it a little bit. As you can see here, 43.50 to 46.50. That's based on standard retrace levels for a potential B wave. And said that, if we break above certain key levels, and that's the beauty of the Elliott Wave, you have key levels. If we break above those, we turn bullish, right? If we turn above 3,600 or 3,800, whatever the levels are, we turn bullish, and we're going to look for pretty much the mid 4,500, which is where we are now. And we've gone to about 46, I don't know, 46, 4,700, somewhere around there. So that was really good. But then, of course, the devil is in the details, right? It's very easy to draw a straight line, but you don't know how that's going to fill in over time. So zooming out, then here we have October, and this is the path we got, right? That I cannot forecast. Well, the only thing I can forecast is like, if this is a B wave, we know from the Elliott wave it's going to be an A, B, C pattern. So we should have filled in an A, B, C. Now, then we go back, and we so far looks like an A, B, C. Now, the question is, did this counter trend rally already top here in July, or are we going to see one more push higher to about 4,800? It looks like we're going to get that one more push higher, which matches, of course, with the breadth thrust, right? That's what I mean. So we're matching the breadth thrust with the Elliott wave. Then we have a C is 1.618 relationship times the length of A at 4,800. So we can push
up there. What happens up there if that counts correct? We complete it and then start heading lower again?
Yes, then this, so the primary expectation here back in December was we're going to rally for this B wave and then lower. Well, we got the rally, but I had a C is
the rally extended further than you originally thought. So that made it be right. Okay.
Yes. So what you say is, well, normally a C wave is equal to the length of the A wave. So that's why I had this blue little arrow here, and it got us to 4,400. Now that's when you say, well, maybe it's time to become a little bit more cautious and those type of things if you use this word for your trading. And we got to 4,600. So it's not too bad a forecast from December.
I have a question. This pullback from 46 to 41, wasn't that 5 waves down?
You could. Then it's an overlapping leading diagonal. That is now our alternative. Then it would be an overlapping leading diagonal, because you see this spike higher, it overlaps with this drop lower, and that is not allowed in an impulse in Elliott wave.
How about an expanding flat?
Yeah, that's possible. Don't really see it.
And I don't even know what it means, but I figured you would.
Yeah, no,
there's all kinds of flats. A running flat, a flat top haircut, a flat tire.
Yes. Yeah.
All right.
Now this still looks does look corrective. So this thrust event tells us that the statistics tells us, based on historical patterns, to look higher over the long term. But of course, there will be nasty pullbacks along the way. The first, the second, the third, the fourth, and the fifth, etc. The A, the B, the C. All those patterns still need to fill itself in. Nothing goes up straight. And currently, we're going up straight. The S&P 500 had one down day so far since October 27. Over the last 12 trading days, we've only had one down day. That's quite that's only powerful. 50 points. That's very powerful. It does cause some problems for the Elliott wave, because you have very little reference point. So if your pullback is only 50 points out of 4,500, it starts to become very complicated to assess a wave to a 2-hour pullback of 10, 20 points, right? Then is this a wave? It's not. And then you easily fall prey to over-analyzing the markets. And then it's sometimes just better to fall back to the bigger picture, which I wanted to share. So we can still go to 4,800. So that is, I think, probably in the cards. And then we drop. So then this blue line that we had the original in December will then simply, of course, be moved forward. So the December forecast, of course, was in that sense wrong, right? It was wrong because we did go much higher. It looks like we're going even higher. But again, I cannot predict the markets. You simply go by standard patterns that we know. And then you go, well, we start off with a CSA relationship. We start off with where a B wave normally tends to top, somewhere around 50 to 76.4%. And
so if we just stop our node just a little bit above record highs, which is what you're projecting, this is a formation that trips a lot of people up. At new highs, people get bullish, but it could be an irregular B up there.
Yes, so this would then be, this cycle A wave would turn into a flat, and then of the irregular kind, because irregular means the B wave is longer than the A wave.
Yeah.
Okay. But if we're going to go to new all-time highs, then I think we need to reassess our entire bigger picture, and that we are still in a impulse higher from the October lows. And then we have a very deep fourth wave since the 2020 low. 1, 2, 3, 4. And this is then wave 5. And I believe wave 5 will go to about 5,000. You can see we have some very nice matching Fibonacci extensions for wave 5 and 5 at 5,014. I hope your viewers can see this, and 5,034. So we can easily go there, and that would then, as you can see, switch the label from Super Cycle 3 in 2022 to probably in 2024. Then I was off by one wave. Again, it is sometimes hard to know exactly which wave is which. This is still a possibility. Okay, so then we had either completion here, or we're going to go one move higher. Then I always say, longer term, please understand the upside reward. The upside reward at current levels is about 500 out of 4,500. It's about 10%, a little bit more than 10%. But your downside risk on the long term is probably 50 to 75% haircut. That's simply what we're going to look for. So
let me ask you this. All right, yeah, and last time you were on, you do some GAN work, and I asked you. I said, so anything important with GAN, and you said your GAN work says 2024 was going to be the negative year.
Yes, correct. Yes, so that's still what we're tracking, and that would be a market panic year. I don't have the information, but that's still possible. So we're getting already awfully close to the upside target here at 4,800 to 5,000 plus. The same here. No difference, right? 4,800 here, and then we crater. But that cratering is not going to like instantly, right? We still need to. This is going to be a C wave, so we need a 1, 2, 3, 4, 5. So we need to set up 1 of 1, and then 2, 3, 4, 5, and then we get the larger second wave. So this is going to go lower and then higher. That's going to take months. This is going to be like 2007, 2008 market top state time. You don't know how big the bounce is going to be, right? So we get an initiation move. I don't know how much. And then we get our counter trend rally. Can be 80, 90% retracement. Could be 50%. No idea, of course, that is so far ahead. We haven't even figured out if we're going to top.
You know what I think when I see this and the timing, if it plays out that way, and we're declining into next fall, into the elections, that the incumbent party has no chance if we're trading under 3,400 going into the election.
Agree. If that's then market sentiment is negative, and a lot of people will take that into consideration. They will look at their bank statements, they will look at their 401k and go like, you know what, under this one that we currently have, it didn't go so well for me, so I'm going to vote for somebody else. And I'm not a political expert, but most of the time when we vote, it is a anti-vote. We're mostly voting against the other party. Whoever the other party is, we want to vote. We never seem to vote for, right? Most people elected Biden because they didn't like Trump. That's why.
Well, the 29 crash reopened the door for who took over Europe.
Oh yes, absolutely. So yeah,
plus the currency crisis Germany was having. So anyway, interesting history.
Yeah, for sure. So I think both paths, unless of course unless we break below the October lows, right? The October lows are now the line in descent. Unless we break below those lows, I'm going to look for 4,800, 5,000 in whatever form or fashion that the market wants to get us there. That's the intermediate term. So then the Elliott Wave has a fantastic if-then scenario for you. All right. So if we break below those lows, I think we're already on our way for this larger crash. Okay. Then this was just a counter trend rally, and we're done. And we're going to go to probably the March 2020 lows. So if you're long, then you know where your stop or stop loss should be. Super easy, right? That's the beauty of the Elliott Wave. But for now, I think it's a lot of risk. Yeah, yeah. But for that's but we're looking for both. Then we apply that thrust event, right? The thrust event, 10 out of 10 times tells you to look longer term higher. Well, then we match that with these upside targets. The only chart that keeps me awake at night, Dale, is this one. And I think it is a little bit underrated. It is the AD line from the NYA.
Yeah,
This one.
without us making it's still weak, right?
It is still weak. Let me see. Sorry, a lot of charts. This one. So in a bull market, here is 2019 to 2021. The market rallies and the AD line rallies. The AD line makes about consistent new all-time highs, coinciding with the market doing the same. Even here, 2020, you can see how rapidly the AD line went back to making new all-time highs, or even new uptrend highs, right, wherever you are. So far, we've not done it. Now, this square here, as you can see, it is about 2.5 years long, is the time it took from the 2009 low for the AD line to make a new high above the 2007 high, or whatever, 2008, whenever it makes its previous high. So it took from this long. So this is 1 year, 2 year, about 2.5 years. From 2009, March 2009, 2.5 years out, which gets us into 2011. Took that long for the AD line to make a new uptrend high, which was the signal for the market to really kick in a new bull. And since 2011, it's been quite an impressive bull. Now, as you can see, we're starting to run out of time. This would be the longest time frame since 2009, not in its history, that the stock market has rallied without the AD line making a new all-time high. That is often long-term very bullish. It is a liquidity issue. If you follow Tom
Long-term
McClellan,
very bullish. Long-term
no,
bullish.
bearish.
Okay, you
That's
said
bearish.
bullish. Okay.
Oh,
All right.
I'm sorry. It is
That's all right.
long-term bearish. Yeah, bullish,
All right.
bearish, bullish. It is long-term bearish. If we don't see that new all-time high, but price does, there's a liquidity issue. It means the underlying market breadth of the stock market is not great. This is what we want to see. And currently, we're not seeing it. So this chart keeps me awake. So even if we go to 5,000 and we do so on not new highs in the AD line, or even just just barely trying to retest it, that's not looking good. And we're running out of time. Why is this timing important? Because it means that if we cannot even match this time frame, which was of course a very important low in 2009.
So that'll take us till May. It has to do it by May.
Correct, by May. If we don't see a new all-time high by May, and this is already the longest stretch we've had since 2009. I mean, look here, the 2020 market crash took a couple of months, right? Look here in 2019. That was also a scary year, 2019. That was a decent 25% correction. It took 6-7 months. And we're now already 2 years underway. And 2 years later, still no new high in the AD line. There is a serious underlying liquidity issue. No surprise, of course, because the Federal Reserve is not doing quantitative easing anymore. And that will matter for the stock market eventually. And that will fit either with this already, setting up for this C wave, or a little bit further down the road. It is going to be, in my humble opinion, a pay me now or pay me later from a bearish point of view setup. This is the only chart that keeps me awake at night, and that doesn't align with price yet. So
okay, well, I recommend you stop looking at it.
yeah,
and get some rest. That's Dr. Pinkert's medical trading advice. So, Arnaud, great to have you here. People that are watching us now and watch the video later, the best way to follow through to see your work, you could show your website or
go to my website, intelligentinvesting.market, and there is many ways you can sign up. I do this forecasting, as I just talked about. If you think, well, I don't want to read what this guy has to say all the time, you can, for example, do by major market trading alerts. You will get trading alerts at the end of the day on all major ETFs. You don't have to do any of your work yourself. It will just tell you when to buy, when to sell. We're doing really well. This is since July, up double digits. And you will get an email that looks like this for the Dow Jones, the NASDAQ. No analysis involved. It will just tell you buy, sell, hold, whatever you want to do. You don't have to listen to me yapping. If you do want to do it yourself, you can then, of course, do the major market forecasting. 50% off for the first month. It's $60-70 a month. So you have a first month, you can try it. and see if you can use it for your own work. If you don't, then sign up for a trading alert email. Again, it won't always be winning trades. We sometimes have a month of just losing trades because the market is not easy. But the long run, having a system that helps you trading and buying and selling will be profitable. And I even do crypto forecasting, gold, but we can talk about those another time.
Okay, our notes are sure, everybody. Follow them at Intel_invest on X.
Yeah, there we are.
So-called Twitter. There he is. And Arnaud, great talking to you and catching up. Have a great holiday season going into the end of the year. And let's talk again early next year in the winter. See where
good.
things are at, buddy. You're my
Yeah,
trading warrior brother, and I root for you.
Thank you so much. Thank you so much for having me, Dale. It was a real pleasure being allowed to explain a little bit of my thoughts behind where we are in the markets and what keeps me up at night.
Okay, well, we appreciate your giving spirit in coming here and sharing your stuff. Really do.
Well, wonderful. Have a great season.
All right. Good hunting, Arnaud, everyone. Thank you. Remember, don't just count your pips, count your blessings. I'll see everyone later. Not later, I mean tomorrow. That's later. All right. Good hunting, everyone. Adios. Thanks, Ingmar. See you guys.